In 2025, we experienced quite possibly the most bullish news in crypto history. And with crypto making new lows, many people believe this is one massive bear trap where big institutional players are trying to steal your crypto bags from you at a discount. But at the start of 2025, we saw Gary Gensler resign and his war on crypto was over. We are witnessing a very pro-crypto Congress work on stablecoin legislation, which is making waves through the crypto world. Directly on the whitehouse.gov website, we have an official strategic Bitcoin reserve and a US digital asset stockpile, to which Trump mentioned one key asset among others, which was XRP. And to make matters even better, Brad Garlinghouse, CEO of Ripple, even went ahead and posted on X that the SEC will drop its appeal and that this was a resounding victory for Ripple, where now they only pay $50 million on a $125 million settlement. And the bullish news just kept coming as players like BlackRock are mega bullish on asset tokenization because they know what the future will look like. And only one of the major key crypto players that can solve a lot of these problems at a very tremendous scale is Ripple, which is why we saw Ripple double down on crypto and asset custodial services. But they even also launched the RLUSD stablecoin, which will bring billions into the XRP ledger and ecosystem. Then even recently, the FDIC opened the doors for banks to bank on crypto without actually having to face regulatory pressure, backlash, or lawsuits. How much more bullish could any and all of this get? But the bulls have been getting wrecked recently and the bears have been in control. Since off the recent highs, we are currently down about 17% and counting. So what's going on? Is this a bear trap? When will markets recover, or will we get more downside? Was this the perfect example to date of a buy the rumor, sell the news type of a situation? And the reality is the only fuel we have left, the only rumor XRP has left, is extremely likely, by the way, and potentially because of that already priced in, which is a spot ETF sometime in the upcoming months from players like BlackRock. However, the last video I posted, which was titled "Why I Just Sold All of My Crypto," got loads of hate. And I mean, seriously, go ahead and look through the comments. It was not a liked video by any means. I get it. It's not easy to hear another YouTuber bouncing back and forth whether or not that they're bearish on your bags, especially if you hold a lot of it. I had folks in the comments calling me a hater, uneducated, even saying I flip-flop often. This simply isn't true. Over the last few weeks, in virtually all of my videos, I've been consistently telling people to prepare for more downside. And if you rewatch any of the videos, even if they look bullish from the front end, you'll see that this is true. I have the receipts, they're on the channel, no videos have been deleted. But I've learned many people don't watch past the first few minutes when I cover news. Yes, news can be bullish, but that doesn't mean that we should be misled to think only bullish. Sometimes I believe people look for news or hold a bag bias that confirms that they are making the right decision by holding through volatility. But one thing I've learned from the very best traders and investors is that you should hold strong convictions loosely, which means to be totally and absolutely convicted in your position before you enter a market, and then to watch that position until the market tells you to change your mind. And that's exactly what happened, especially after the Trump pump. I noticed the market started selling off a lot harder than it should. In other words, when you see a major event like this, it should pump the price past an all-time high right here on March 2nd. However, all we saw was more downside and sell pressure, which means bigger players seem to be taking some profit. Even if there's accumulation in these ranges, it doesn't seem right now that even with all the accumulation and potential whales loving the price at 206, that they also can't change their mind and say, well, the market's not giving me what I want and I don't want to be holding a bag too much longer, that they couldn't flip and sell. I've noticed the best traders and investors arguably do that more often than we'd like to believe. So even if they're dollar cost averaging into positions, they can also make money on the short side. If they see the market getting weaker, if they click sell with a lot of money and leverage, they also make a lot of money. And so they are relatively agnostic, unlike people who are only buying spot and holding for potential upside. But that's the reality of the markets. There are too many unforeseen circumstances. In other words, if you were short and Trump tweeted this and you pumped really hard past your stops, guess what? You are out. You lost money. It's easy to get blindsided by so many things that it's impossible to actually see coming unless you're an insider 100% of the time, all the time in every market, which again is impossible. In other words, when the markets change, you should be willing to change. But with the advent of this Trump pump and a sell-off and then an even lower high and a failure to break above the range high right here from March 7th on the Brad Garlinghouse news with the SEC and Ripple finally calling it over, I knew something was up. The fact that we are failing to break for new highs tells me that this trend is relatively strong and that it was a good idea to wait in this range for a breakout before we enter, or to wait for it to touch back to $2. And we remain to see what happens there. But things are not looking too good when you get this many touches in this range right here. The more you knock on a door, the more likely it's going to open. In other words, the more that you hit a support, the more likely it breaks down. The more you hit a resistance, the more likely it breaks out. This is just not what anyone wants to hear, which is why it's easy to hate. However, by the time you're watching this video, it's very much possible we might ride XRP for new lows into these ranges here. As you can see, we have a lot of room to cover and make up for. But the real question is, are you prepared? And no, this isn't financial advice or me telling you to go sell your entire portfolio. This is just me sharing my opinions after doing a lot of homework into technical analysis and markets over the years, seeing what does and what doesn't affect markets, understanding that at the end of the day, I can't just hope to get rich by holding, but that I have to be realistic as well and prepare with my portfolio based on what I think happens next. Sometimes it's best to just de-lever a little, to de-risk a little, to take a little bit of profit off the table, especially if you're in profit at the $2 range. But in this video, I'll be covering a bit of the latest news as well as the price action and how to approach the market in all circumstances moving forward so you can have confidence and assurance about what to do next. And as always, even if you're not feeling too bullish, if you're still feeling blessed, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the channel, my friend. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDeFi, PauliDeFi. So I'm just going to cover a bit of news here across the board, anything and all things XRP, which markets have been relatively slow. We've experienced so many dopamine hits and then so much disappointment when it comes to the price action of the markets, as it seems the majority of the price action was already priced in based on the fact that we would have a pro-crypto Congress, a pro-crypto president, right? An SEC that's no longer going to attack XRP. When you saw Gary Gensler resign, probably a good time to think about, well, that is another way that the market's going to pump, that it's going to pump into that event. And then the event happens and then it's lackluster, right? Well, that said, we have Tyler Winklevoss from Gemini basically calling out the XRP Ripple army to earn money back with their Gemini credit card every single time you swipe. So that's actually pretty cool. If you want to use XRP over at Gemini, go ahead and do that. And no, this is not an ad. It's just something that Brad Garlinghouse reposted and I'd like to share with the community. Another major piece of news, and I would argue this is probably one of the most important, as in the past we had something called Operation Choke Point 2.0, which none of our regulatory bodies ever really admitted to, but everyone already knows that's exactly what was happening, especially as in Discovery, a lawsuit between Coinbase and I believe if it was not the FDIC, it was the SEC, but it was one of these major players, got a bunch of documentation that basically stated, hey, you need to debank any crypto crypto companies or companies related to crypto. In other words, they were intentionally attacking anything and all things that were crypto. Well, now the FDIC has turned around completely 180, saying they just issued new guidance for FDIC supervised banks, in other words, virtually all of the major banks, that clarifies the process for banks to engage in crypto related activities. In other words, the FDIC is turning a page on the flawed approach over the past 3 years. And here's basically what that meant, that any bank can now engage in permissible crypto-related activities. Here's the key part: without receiving prior FDIC approval. In other words, you're not going to get debanked for messing around with crypto. And here's what those activities include: new and emerging technologies such as crypto assets and digital assets, provided that they adequately manage the associated risks. In other words, no prior approval. FDIC is no longer going to attack crypto. They're no longer going to attack banks. You can tell me right now that banks are not going to go ahead and start building out departments and building out different ways and strategies to approach crypto and offer those products now to their current and existing clients. Now, another interesting piece of news, which I think is bullish for XRP, but not bullish. See, this is the problem. When I say bullish, it doesn't mean, oh my gosh, it has to pump. It just means that relatively speaking, it is bullish, considering XRP could soon dethrone Ethereum. And that's according to a top analyst, but I'll just show you what I see on the chart. Right here, I have the price action on XRP. Okay, since basically November 3rd and just before the election, when we really started to take off and rally, we are still currently up 300%. So even if we dump to, let's say, $1.50, we're still tremendously up. That doesn't mean that, you might want to sit through that entire thing or range or volatility. It simply means that you are up relatively speaking. However, if I pull up a chart on Ethereum has performed so poorly and terribly that if you would have invested in Ethereum in that same time frame, okay, and held the entire range, not only did Ethereum have a dismal return of about 63% at its high, but it's currently down 27.3%. Let me go ahead and get out of the way right here. 27%. In other words, there's almost a 330% difference between both assets, XRP and Ethereum. But here's where things get really interesting. If I go ahead and pull up an Ethereum chart versus the XRP chart and pull that up, you can see that in the past, XRP and Ethereum typically held a relationship where they traded in a range, which simply means that when one was going down, maybe the other didn't go down as hard, and vice versa. Or when both went up, one went up harder, the other didn't. Or sometimes they would deviate. One would go up, one would go down. But whenever you saw a deviation, right, it really wasn't as radical as what we saw starting in November. And since that point in time, Ethereum relative to XRP has consistently just traded down and down and down. I mean, this is arguably one of the worst performing charts, even from that local range high up here. We'll go ahead and do it, not from the wick, but from the closes on those candles. And we're talking a daily time frame, by the way. I'll go ahead and pull this up. You can see that XRP, or better yet, Ethereum is down 88% to XRP. That is a terrible performing asset. So that said, I think this is one of those times where an actual analyst online might be correct. Right now, Ethereum is sitting at a measly $215 billion, which is pretty sad considering Bitcoin consistently is gaining dominance, which we're going to look at in a second, while XRP is sitting at about $118.9 billion. So it's very much possible we see a flippening happen yet again, either into the end of the year or by next year. I think Ethereum is likely going to continue to dump hard, while XRP could also dump. It just might not dump as hard. But here's where the Bitcoin haters really won't like me, but I'm just going to point it out. These are straight up numbers, and it's hard to basically argue against the numbers. It's the fact that we recently broke for a new high, at least a local high on Bitcoin. And again, I'm looking at a daily chart, but even if I look at that weekly chart, we consistently were trading right below this range of about 62% on the dominance. And since that point in time, we've actually broke for some new highs, and I expect this thing to continue to climb as more and more money either flows out of altcoins into Bitcoin Or, right, money is just staying in Bitcoin, but everyone's capitulating and taking losses on their altcoins, which would lead Bitcoin to continue to gain in dominance. Right now, it's sitting at 62.4% of all of the money in the market. And what's interesting is this is one of the very first bull market scenarios we've ever seen, going back to November of 2022, where Bitcoin has consistently gained in dominance for such a sustained period of time. Typically, it would look slightly different, or we'd see these nasty collapses in Bitcoin dominance as a lot of money would flow and rotate out of Bitcoin into altcoins, which is why this would dump. But since this point in time, we've seen just a steady uptrend on Bitcoin dominance, and we had a slight altcoin rally here back in November. Obviously, a lot of that money was flowing into all sorts of altcoins with the Trump election. However, after that point in time, people are flying into a hedge as a safety net, and Bitcoin is basically that. Now, here is what's crazy. Although many market participants view Bitcoin as a hedge against inflation, reckless government spending, a new form of digital gold and money, and blah, 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 at the end of the day, it has not acted as such, as it's probably still a relatively young and nascent asset and still hasn't seen the level of institutional adoption we need to see in order for things to change, because the narrative has been one thing, but the price action has been another. We're currently down 24% from the range highs right here on the closes, but even from that all-time high, we're still down 26-ish%, which is a technical bear market when it comes to TradFi markets. Probably not crypto, because crypto can dump like 70+%. It's very volatile. However, this is a true deviation away from gold, where gold just saw another move for a new all-time high all the way up to $3,100. And since the major range lows back here in December of this year, it is up a whopping 21%. So essentially, there is another deviation of about 40% between gold and Bitcoin. And by the way, Bitcoin has a better hold than virtually all other crypto assets, as you can see on the Bitcoin dominance chart. So that said, this is still a young market, and at the end of the day, we still have to be realistic about what comes next. So what exactly is going to come next? Is this a bear trap? Let's get into the chart. All right, ladies and gentlemen, let's get into this chart. So here's the deal. I've been talking about this range for quite some time now. And again, this is not me trying to say I'm flip-flopping. Go ahead and watch all of the videos. I've literally said, even if I'm bullish from a longer term perspective, in the short term, it's very much possible we continue to dump. And that's because if we touch this range one last time, this would be your textbook head and shoulders, guys. I mean, look at this. This would be your shoulder. This is your head. This is your next shoulder. One last touchdown. Huge, especially when we've already seen virtually every other crypto in the market break down below this range, while XRP has been holding the range. We had a double top on Bitcoin, but we are having like a head and shoulders on XRP. So one last touchdown here, and we're already there right now at time of recording. It's very much possible that we might see the price dump a little bit lower than this range low in the volatility we got on February 3rd of 2025. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and this would be our 11th time touching the range of about $2.05 to about $1.95. Anything below $1.95, extremely bearish. And again, bearish on the short term. In the long term, I'm still very bullish. Crypto, Bitcoin, XRP, you name it. But it's likely going to break down, especially considering, look at this. We had 4 straight weeks of up. 1, 2, 3, 4, 5 actually. 5 straight weeks of up, and we have a lot of area to cover here when it comes to volume and support. If I go ahead and pull up that VRVP, and let's go ahead and remove those drawings, you can see that virtually all of the major range support is down here at like 86 to 87 cents and even 36 cents. That would have been a great time to accumulate and buy, and many people on this channel did. However, since that point in time, we failed to maintain the range of $2.40, and we have virtually no trade activity, even when I zoom back out. out, you can see no trade activity in these ranges all the way down until about $1.10. So my major range of support, which I don't know what happens next. If I did, believe me, right, I wouldn't be making all these videos. I'd be trading against you guys, but I don't know what's happening, and I like providing value, and I like training and teaching, and I'm going to be taking positions in XRP when I see some level of support, either between 150 down to 130 and even potentially lower at 110. This is really where I see our next major range of support. Especially if you pull up a VRVP, go from the top all the way down, you can see that the 618 range is actually really freaking low and arguably kind of scary, considering that's at about $1 per XRP. The mid-range, or the halfway point, the 0.5 is at about 130 and the 0.38 is at about 162. But because we have so far to go down, and because typically you get a 100% move, so right here you can see that from the top down to this range low right here of about $1.90, it's a 44% gain or loss, excuse me, and then it'd be another $1.50 from about $1.95. That should take us right here to the 110. So look, if I remove everything, you can see that a 100% move to the downside would only be 90 cents from here, and that still takes us down to 110, which is kind of scary. An actual move of 150, however, would take us right back into these ranges of 52 cents. I don't see that happening anytime soon. It's very much possible it could happen through the summer if we continue to sell off through May, right? As they say in May, sell in May and look away. At 50 cents, I'm 100% a buyer of XRP, but I'd first like to see how we are supported and how the market actually looks at about 150 down to 110. Those are my major ranges of support, at least in the short term. In the interim, as we break down, I'd like to see how we bounce, how we're supported. But even then, guys, when you're going on a daily time frame and you pull up that 10 and 20 EMA, we not only sold off from the VRVP range right here at about $2.40, but we are now back below and seeing a crossover on that 20 EMA above the 10 EMA. Generally speaking, when I see something like this into a range support that we've failed to consistently hold, and now we're looking like we're breaking down, I would love to go and take some leverage and short this thing, but for the sake of everyone on this channel, I'm literally not going to do that. I've been sitting in cash, and honestly, I don't really want to manage a position right now. I'm happy I'm in cash on my swing trade portfolio. From an investment side portfolio, I'm just dollar cost averaging into these things, and I'm holding over the decade. So that's my strategy. I have multiple different portfolios. My investment portfolio, I'm just dollar cost averaging when I'm sitting on cash. From a swing perspective, I'm completely out in that entire portfolio, and I'm waiting for newer lows. However, if you are wanting to learn more about how to approach charts, how to, pull up perspectives when we're talking about one chart versus another, versus, an XRP versus Ethereum type deal, relative strength, all of the different indicators. I mean, there's so much to cover and learn. I host live calls every single Tuesday on the technical analysis side, and would love for you guys to be on it with our 1K plus members. It's right here on the calendar. The next one is happening here on the very first of the month. That said, then go to bullrunners.com, click the link below to get a consistent live feed in terms of how I approach the markets. You can even go ahead and ask questions, because this is stuff I can't cover live with you as it's happening, because you're watching a video at some point in the future. But also, we have a library that we're consistently updating with all sorts of value, and we have one of the best research and DeFi teams in the entire space. So head on over to bullrunners.com. Thanks so much for watching the video, my friend. I appreciate your time, and we will see you in the next video. Also, be sure to subscribe if you learned something new. I'll see you next time. Goodbye.